Ken, why do you think these stocks can ride out higher rates?
Thank you. Well, our new thesis RIP looked at past credit cycle inputs, and what we saw was the builders actually outperforming, which is kind of counterintuitive. So what led us to that conclusion? We looked at 19 cycles from 1963, and we actually saw that the home builders historically fall about 41% on an absolute, similar to where they are, 28% versus the market. But more importantly, the home builders actually begin to perform in line with the market. So it's very much a relative call to the market. The idea being early pain, which they've suffered, can equal early gain. Usually the stocks trough in the third quartile of the cycle, which average about 14 months.
Okay, got it. So this is more about how these stocks have traded ahead of future rate hikes. But which home builder do you think has the most pricing power in this environment? We heard from Toll Brothers a couple weeks ago warning of a shortage of homes. That, of course, has been the big story for over many years now.
Right. So, adjectives, tight, oversupplied, pricing power. We do follow stocks historically. Home builder gross margins follow price appreciation, which, as you know, is beginning to roll over. I think there's quite a bit more supply out there than people think. You should look to days on market for that. So we are quite cautious on fundamentals. We are quite cautious on policy conditions. However, market conditions, valuation, relative underperformance really give us a lot of confidence that from a relative basis, the builders can start outperforming. And it's been pretty pronounced, even, for the people that remember 05 to 09, the builders basically fell a whole bunch into late 07, and then they actually outperformed the market from late 07 into February 09. We saw that in 1966. We saw that in 1974. And I don't know how long the cycle is going to be on the downside, but I do think we've reached that critical point of relative neutrality that leads to some outperformance as you look down the line.
If the Fed goes with 75 or 100 basis points on Wednesday, how do you expect home builders to respond?
How we get to the Fed moving to the 2-year, if that's the litmus test we want to use, I think for mortgage rate, it's really important to think about the 10-year, which is different than the front end of the curve. Our title, RIP, it stands for real rates, inflation expectation, and mortgage premiums. Right now, which, the mortgage premiums are roughly 100 basis points, 260, 70 above their long-term average. So I think there are some cards that could be, potential offsets for what's obviously a very difficult fundamental environment as we looked at in our report back to 1963.
All right, Ken, we'll leave it there. Home builders are trading higher today. Ken Zener, thank you for joining us.